The Keiser Report. I'm Max Keiser. Time now to speak with Konstantin Georgiev over there in Dublin. He's a professor, a columnist, a businessman, and he was born in the USSR. Konstantin, welcome back to the Keiser Report.
Delighted to be with you, Max.
Konstantin, tell us about the ruble. What the frick is going on? What are the consequences? What's next? Konstantin.
Well, we have a really exciting times right now in Russia vis-a-vis the ruble and the currency crisis that is going on. It's a textbook classic example of what's happening in a currency crisis. We had the first blowout earlier this week. We started on Monday, it continued into Tuesday. Russian ruble has hit over 100 rate to the euro. Devaluation of the ruble has gone over 50%. It far exceeded the decline in oil prices. And then things kind of calmed down. The central bank intervened very aggressively into the markets. The Ministry for Finance and the Ministry for the Economy stepped in as well. And there was, again, classic response to the crisis itself. Now we're witnessing ruble trading kind of sideways, if you want. Probably we're looking at the lull in the storm. It's an eye of the storm, really. And because the underlying conditions for the crisis are still present there, they still haven't gone away. The big question, of course, is where the ruble is going to head from here. Is it really being oversold, or is it still has some room to the downside? A lot of that depends on oil prices, but a lot of that also depends on the Russian government actions forward.
All right, now, Konstantin, the Forex market is a $5 trillion per day market dominated by the dollar, the euro, the yen. And this is really new territory for Russia and the Russian ruble and the Russian central bank, because up until now, the ruble and the Russian economy has been somewhat protected. They haven't really been on a day-to-day basis involved in the Forex market as such. So isn't that correct? So in other words, this is kind of a baptism by fire, because it was recently allowed that the ruble would be allowed to trade freely on the Forex, and it stuck its nose out, and it got hammered. But I think that's a good lesson. Not going forward, I think the central bank in Russia and the Forex traders, Russia is going to try to become a bigger factor in the Forex market, and now this is the way forward. What do you think?
Well, no, you are completely correct in that context. It's very difficult to say how much of the bloody nose has been caused by the entry into the Forex markets in terms of the free float. Russia has aggressively moved into the free float, in part because it was planned originally. They were planning to go into free float for the ruble at the end of this year anyways. They sped the process up by about a couple of months, in part because there has been significant pressure on foreign exchange reserves, and they are rightly, in my view, conserving those reserves for the future, because going forward, the Russian economy will need very significant investments. It will need significant allocations of funds for the redemptions of debts and bonds of the corporates and also of the banks, which are impacted currently by the sanctions. So as a result of that, the speeding up of this entry into the market has been correct. The timing of it has been very unfortunate. This is almost a perfect storm from the currency point of view, from a currency crisis point of view. And of course, again, the way they're managing it right now seems to be mature and developing over time as well. For example, if you look about a month ago, the Central Bank of Russia was issuing fairly conflicting statements about the relationship between its support and willingness to support the ruble versus how they're going to address the issue of the interest rates vis-a-vis the overall economy and investment in the economy. They're kind of changing that tack right now. They're moving away from it. And there is a very right and correct, in my view, realization that the foreign exchange reserves need to be preserved.
Yeah, I was very interested in the comments of David Cameron, the Prime Minister here in the UK, at Prime Minister Question Time this week. He stood up in the House of Commons and said that we have a ground offensive against Russia moving into Ukraine. We have a ground offensive against Russia, working with the U.S., putting tanks in Estonia. Now we have a financial initiative against the ruble, and he essentially alluding to the fact that it was his traders in the City of London working with America that attacked the ruble. And then today, or this week in Putin's press conference, he said that financial speculation is not a crime. So it sounds as though David Cameron's posturing, the great peacock that Cameron is, was met with a stony wall of silence. And I think the attitude in Russia now is, bring on your weapons of mass financial destruction, you putz. We're ready for you. What do you think, Cameron?
President Putin today very clearly stated that in his view, 25 to 30% of the current crisis is really accounted for by the combination of the Western sanctions. He's probably correct. It's somewhere in that neighborhood. sanctions themselves had an impact only in terms of the cutting off the funding for Russian banks and Russian corporates in the international markets. That in return triggered redemptions of bonds and debts. And there are significant debts. If you look at the next year forward, 101 billion US dollars is repayable by Russian corporates and Russian banks in terms of the loans that they have accumulated abroad. Some of that is repayable to themselves effectively. So in a sense, some of that is not exactly the pressure on Russia as such, on the Russian economy, but quite a big chunk of that is going to the likes of the Netherlands, to the likes of Austria, to the likes of Swedish banks and French banks and Italian banks, and then to a lesser extent the likes of the UK, Germany, and Switzerland. So there is that kind of effect as well there of the sanctions. But beyond that, it really is a combination, okay? You are correct to point to the issue of the speculation. What you miss there is the extent to which the algorithmic trading, for example, and high-frequency trading impacts the currency markets. And the Russian ruble used to be a little bit out of that space simply because of the tighter controls by the central bank. Now that it is free flow, it is open market for it effectively, for the algos to step in. And when you look at the volatility, especially in the US dollar-ruble exchange rate, that volatility is very kind of capped, but at the same time very fast moving. There is a very rapid change in terms of the prices and volumes traded, all indicative of very significant algorithmic trading. Now, is President Putin correct in saying that the financial speculation is not a crime? I would tend to agree with him, but then I am a libertarian, which is very strange to be for a libertarian to be in agreement with President Putin. But he is correct. It's not, of course, a financial crime. The issue is, are the households and companies in Russia dollarizing themselves currently at excessive rate? In other words, is it the rate which is beyond what we would call rational and really is reflective of their behavioral fears, their behavioral concerns? If that is the case, and the central bank, for example, hinted at that very strongly as well yesterday, if that is the case and it is a behavioral, then the response to it is to try to alter that behavior, simply because the fundamentals which are driving that behavior are not necessarily consistent with the pricing in the markets itself. So again, is central bank doing the right thing there by trying to calm the markets, by trying to change the repo, for example, eligibility of the collateral for the banks, the mark-to-market accounting rules and procedures as well that it accepts from the banks? I think they are correct. This is a crisis. They're trying to address it through all of the, if you want, tools and weapons in their arsenal that they have. That's a smart move.
Yeah, in other words, they came along and they said, we're going to change the rules for collateral. We're going to change the rules for mark-to-market. We've got an economy in Russia, which is a $2 trillion economy with almost no debt at all, with a positive balance of trade. If you want to go to war with us with your algorithmic trading and attack the rubles, we can leverage up considerably here, and we can bury the pound, especially if we're working with China, our partner. We can bury the pound. So is David Cameron being an idiot by tempting the bear, in other words, he's going to lose in the Forex market, just like he lost in Ukraine. He's losing everywhere in the world. He's the most overrated leader in the world. Is he now going to lose in the Forex market, Konstantin?
Well, I wouldn't use that strong of a language about Cameron, but I would say that Cameron's statement is inconsistent with his own policy objectives. If Cameron's policy objective is to effect change in Russia in the political spectrum, the last thing Cameron should be doing is trying to claim credit for the mess that is being going on right now in currency markets over there to himself. Because all it does, it reinforces the position of the even more nationalistic circles of Russian opposition. It even more solidifies the support for President Putin in Russia, simply because Russian people look at it and say, look, Prime Minister of Great Britain is admitting himself that there is a huge problem there that they are causing. So as a result of that, Cameron is not really acting smart by trying to claim any credit there. Interestingly enough, you mentioned the current account and trade deficit, and this goes to the heart of the arguments that are flying right now across the Western media, that Russia potentially is facing 1998 moment when it defaulted on the post-Soviet and Soviet period debts. And that is a crucial difference today. Russia is currently running current account surplus. It was in deficit then. It is running fairly strong, almost 3% fiscal surplus, while it was running massive deficits back in the 1990s. Government debt is minuscule. I mentioned 101 billion US dollars repayable next year by the companies and banks. The government debt repayable next year is 2.1 billion. As you mentioned, that's against the 2 trillion economy. It's tiny debt. It is totally sustainable. It is totally outside of the question of being anywhere near default. And yet today we have the Telegraphs writing about the possibility of the Russian sovereign default once again.
Right. Well, they're typically looking in the rearview mirror. They're not forward thinking. They're not smart over there at the Telegraph by any measure, except for Liam Halligan. He's the only smart guy over there. But let's talk about oil for a second. What price barrel of oil is key? In other words, the West is saying that oil has to be at $100 a barrel, or else Russia is kaputski. Or is that really overstated in terms of a factor? Because, of course, the oil is only 15% of Russian GDP. It's 2/3 of exports. Yes, that's true. But what about the price per barrel of oil? Where are the key levels there, Konstantin?
Well, we have 100 marker, we have 80 marker, we have 60 marker. All of those markers in terms of the price of barrel of oil are bogus in the sense that Russian budget, the original Russian budget published earlier in the fall this year, estimated the barrel of oil at 3,500 rubles per barrel. That then ties into the exchange rate. So if, for example, the barrel of oil in the market trades at 70, that means that the ruble-dollar exchange rate is at 50 in order to balance the budget. Now, the issue is, of course, there is an economic impact of that beyond the fiscal side. And here's the issue comes in terms of the price of oil. Last week, the Central Bank of Russia published its own estimates and the forecasts for the economy. And they are saying that if oil averages at about $80 a barrel over 2015, then the Russian economy is likely to contract by between 0.8 and 1%. Now, let's put that into the perspective. In 2012-2013, Eurozone economy contracted by more than that. So it's not quite the crisis or the meltdown. However, if the price of oil drops to $60 a barrel, and this is not a spot price, this is average over the entire year, and I'll return to that in a second, then Russian economy can contract by between 4.5 and 4.7%, which is much more significant contraction on GDP side. Now, what does it mean in terms of the 80 versus 60 average price for a year? Current consensus estimate from the IEA, published literally about 2 weeks ago again, suggests that we can expect the average price of oil next year for Brent to be around $80 a barrel. So again, there is an expectation that oil will firm up a little bit, and this expectation is not coming out from Russians. So as a result of that, I'd rather stick with the forecasts coming out of the IEA on that side.
All right, Konstantin, fair enough. Thanks for being on the Keiser Report.
Thanks a lot, Max.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Liam Halligan of the Telegraph, and BNE.EU, very fine magazine, and economist Konstantin.